For the incorporated business owners that you work with, I always get salary versus dividend. What should I do? How much should I take? For business owners thinking about that split in 2026 when it comes to tax planning, what kind of strategies or how do you talk through incorporated business owners' decisions when they say, how much salary should I take versus dividends?
I always go back to business owners' consideration on Canada Pension Plan and on RSP. For those of us who may be a little older, over 10 years ago, the tax rates on non-eligible dividend used to be a bit lower in certain provinces, so that there was a tax rate advantage to pay yourself $3,500 salary, and the rest you do dividends as a business owner. And that landscape has shifted in the more recent years in terms of the tax rate. So the differential is quite marginal, quite small, so that tax rate wise, it doesn't make a huge difference. The consideration comes down to, uh, unfortunately, Canada Pension Plan is quite expensive for business owners because you're paying the employer side on top of the employee side. So if you add up that 5.95%, you double that, that's close to 12% as a business owner that you have to go put that in. So some business owners don't quite like that, so they decide to go to the dividend route. Now, that's one consideration. Second consideration is CPP does build up a nice guaranteed income stream when you start taking that out. So that's important to clients like or audience like yourself. You work with your advisor and you determine your risk tolerance, how your appetite is with the market fluctuations and things. When I spoke with retirees, regardless of their professionals or business owner, when they retire, people has different level of comfort, how much they want guaranteed income to get deposited into their checking account as like their working income, except they're retired. They go, we don't want any surprises on that. Some people appreciate having a higher percentage of guaranteed income, and CPP would be one income stream for that. And on that basis, I'm just coming back to saying if that's important to you, that your strategy working with your advisor and your accountant would have been at least take out the salary up to the CPP maximum pensionable earning. Now, beyond that level, you look at your RSP. How do you feel about RSP? There's folks who doesn't really like RSP, don't believe in RSP. I'm not advocating for either side. Most of the professional that you work with, most likely, I like to say, will recommend considering RSP just because of the tax deferred growth advantage, and also you get to have flexibility on the tax deductions from your RSP contributions. So the room is you get 18% of your qualified your earned income. So you generate that say 32,000 that Harry was referring to earlier. So if you do that math, that's uh, approximately in the low 200,000 range. Beyond that, you do have that decision. If you want to do dividend, then you can decide to do so. When you want to consider perhaps the borrowing capacity and things, that you take your T1, you take your company's financial statements and T2 to the bank to ask for a line of credit and things. They do look at a minimum, likely 2 years of history. You you wanted to consider, do you work with a banker who really understand, for business owner, taking salary versus taking dividend, it doesn't make a huge difference. So that banker has a good relationship with you and they understand. For private business owners, it doesn't really matter as much. It matters on the form of the what you're taking out, but really just what you decide to do, that it's not a cash flow issue. So a few factors to consider, but if you're going with tax rates, as of the landscape that we're in, it doesn't make a huge difference as it once does.